Okay guys, so what we're going to talk about right now is breakout buying when we're in a giant breakout, market orders versus limit orders. As you know, I highly emphasize buy the ask and sell the bid, because that's what we breakout buying is nothing but fucking how I make money. So that's what I'm trying to show you guys. So bottom line is that usually a limit order, okay? Push it right above the bid. I always buy the ask, you know what I mean, if we're in the money, because it gives me my indication, my confirmation, already my mathematics in my head and all my checklists has gone off, that it's already breaking out again on our breakouts. At 150, 155 I'm in, okay? 153 with moving volume, moving momentum, one big load behind it. That's where I'm at on the board, where I put my orders on the board. Now versus market orders. So say we got one that's slamming right now, and your market's about to open, right? 9:30, right? This thing has got fucking the best news. It's got the low float. It's got everything in our works. We went through our checklist. It's affordable. It's like $3 right now. Cool. We can get 300 shares, $1,000. Let's do the math right now. So the thing's $3. It's got solid legs. It's got the beautiful catalyst. It's got the big deal. Everything's moving. It's been moving up. It was at say 165. Took out at the pre-market. Now we're talking again market orders only here. So if you were pre-market buying something like this is another example, because you wouldn't use market orders. Okay. So 930, 165, and now we're up to the fucking $2 mark. Okay, or 190. And it's like 929, 925, okay? And it goes 195, 196. Now, what you need to see, because you're already on your day high, things already broken out. It hasn't been anywhere near this, okay? Now let's use two examples. One example is this stock has never seen this high ever in its life. And then let's use another example where it's already been there before, say within a relative time, within like say 2 years or 3 years. That would indicate that if it was greater than $2, and say it at 2 years ago it touched 280 or something, that would really give me an extra set of certification that I need to fucking go, yeah, this thing may even get to there. We'll put a resistance line and a level up there. What they put in the Fibonacci's or whatever would probably be right up in that area. Okay, so let's just talk rule number one on it, is that it doesn't have its day. This is its high, okay? So you need to be careful of a high, okay? Now, if it had news from the night before, and we knew this was going to happen, okay, and it gapped up at pre-market, and it had all that stuff, then all the orders are going to load up. All these pre-market orders are going to load at 930 at $2, right off rip, okay? Now that's a good sign. So all these $2 marks is going to squeeze right up past 2, right off the rip. It's going to fucking take out 2s fast. Now, or 3s, I'm sorry, $3, I'm sorry. So we are now looking at that 930 bell, ding, 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 the bell. This thing, the candle, 1 minute candle goes like this. Boom, 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 okay? All off itself. Okay, and then closes here, right, in 1 minute, right? And you see on the wall the level 2s, again, that your buyers, that you're loading up, that they're coming off hard. You got a lot of load coming in. You got people selling off, but the problem is if the stock hasn't been here, people right now, this is where you take into consideration really quickly, okay, if the stock has never been this high, then there's nowhere that anyone can sell off their positions except people that are now high, okay? So that's a low probability of sell-offs right at the moment if everything's in the movement and the momentum on the volume up. We keep going up on the second minute candle now, and we're fucking up to 325, okay? And now all of a sudden we're at 340 and the wall's coming in hot. This is setting up for a trading halt. Okay? And we love these trading halts because if you're in them on this side, you're usually in a good position. However, we'll get to how you exit, because that's where it's really scary. The stocks, we call it going to the moon. Ripping, 165, 340, already taking them out. Now, again, we have nowhere to fall back on. So nobody was holding the bag from this stock. Now, if this situation was reversed just a little, and said that 2 years ago it had touched that 385, okay, then we know that there's probably some fucking bag holders, because there's a lot of people who end up holding the bag and don't end up know how to trade. So you have to know that then when they see their stock come back to anywhere near they're going to get their losses or get out with a minimum loss, they're going to sell off. And that's about it, okay? That's the difference, is that if it had a lot of volume and had a lot of people involved in the stock, you read the metrics, you know that if it had 385, that there could be some sell-off going on. But if there wasn't no 385 to fall back on, the only sell-offs you have are the people right there buying and selling. Me coming in at 3 and scalping out at 325. Those are the sell-offs you have. You don't have big previous loaders that are coming in going, oh my God, I can't wait to unload this thing. I've been on it for fucking a year. I'm dog shit fucking 10 grand back deep. Stupid investors. And this is where shit like that has to happen. It goes wrong. So back to where we're at. We can't, you want to get in at $3 on that market bell on a limit order? Shit, you're not going to get filled. Even if it was 300 shares. You aren't going to get filled. You're not going to get filled, because the probability of it getting filled, if you're using direct access trader, yes, maybe, but anything else, maybe not, okay? But you get filled, and it's risky, because if you didn't get filled and it already moved and now it's at 315 and 325, by the time you go back through your okay, cancel the order, okay, I'll buy 5 more shares, blah, 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 blah. If you're not using hotkeys and you can't just, boom, cancel, boom, back on 305 on limit order, or by your high limit, your ask, or however you have it set up on hotkeys, that's fine. But a lot of you guys don't know what the fuck that is. So this is where market orders come in. If the thing's moving, you buy right on the market. It may fill you at 3, it's moving at 3, but it may fill you at 315. So what? You paid a premium. You're still up in the money. It's 350, it just got halted. Now, let's talk a halt. You're in the money because you bought in on a market order, okay, versus the limit order, okay, where we usually buy the ask and sell the bid. We are now on a market order because we realized we couldn't get in and it's not going to get filled, okay, and so now we're on market order. We got filled at 315. We're on a trading halt at 350. We're up 35 cents on our position, which is roughly 10% at this moment. 35 cents on 350 is 10%, okay, 10%. We're trading, halted at, right, we got into 3, yeah, so that's the math on that. So 350 is the halt. So most trading halts, first one's 5 minutes. Okay? You better watch on your fucking clock on DOS Trader. You better see and take note when you're coming back to that, especially if you're in the play, my friend. When it comes back, when the trading halt opens, if the level 2s during the trading halt you see, which are halted, but you see activity that is like craziness on the sell, and you see a number that says $5 on the board, $7.50 on the board, and you see very little 3, you see like 3 is your lowest, you know that when this thing opens up, we're taking out 350s and we're going to the fucking moon, okay? And it's going to go from 350. Here's the open. Boom. It's going to go. Choo-choo. Choosh. 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 And then you're going to see your level 2s again. Now we're up into 380. Okay? Now, this is where the mean sell-off happens. We're giving you a 1 halt, 1 time. Sometimes this repeats itself. You could get into 2 halts. That's even more probability of losing. Your first halt right here is... your first halt was here. Your 380 right here. You're in at the 3. You got filled at the $3 on the market, remember, or 315, correct? And so now you're up 65 cents, which is now 20% profit. 20% of $900 is $180 up because you got a 300 shares at $3 at $900 out of your account, $1,000, and now you're up 180 on a fucking. This is a 5 minute, and this is the next 6. So 6 minutes from the bell, you're up 180 on $900. Now, you're not the chances of it. Now it's starting to fall off. Now the level 2s are cracking. The sells are going. You got a lot of volume. You got a lot of action. This is momentum price action trading at its finest. You need to be able to get out, and you can just market order out. Now you're going to lose some on the premium. If you're really quick with hotkeys, you put your limit order in. If you get filled, excellent. If not, try it again with a little lower. See if you get filled. If not, go right to market. This is where market orders are and where I only teach market orders, okay? When you're in a giant breakout where parabolic moves that end up going into halts, okay? So, glad you guys got that.